Thank you for joining me for an update on the Satrix Enhanced Balanced Tracker Fund. The investment philosophy of our fund is backed by peer-reviewed studies and empirical research, which has shown that a fund's policy benchmark or strategic asset allocation is the primary determinant of its long-term returns. For this reason, we stick to a thoroughly researched as well as regularly reviewed strategic asset allocation, commonly known as an SAA. Time in the market and not timing the markets is the key ingredient for achieving investment success. We stay true to this maxim in the way we manage our balanced funds. We find that very few managers and their funds are able to consistently exploit tactical asset allocation or TAA opportunities for their clients' benefit, especially on a net of fees basis. We employ TAA at the margin to add value to the portfolio's strategic asset allocation benchmark while keeping fees and the total investment charge low. We don't employ stock selection either, as it is also an inconsistent and less significant way to add value. Instead, we efficiently gain exposure to each asset class by tracking a widely accepted benchmark index representative of each asset class. The fund is geared towards longer-term growth, with 80% of the SAA allocated to growth assets and 38% to offshore. Some asset classes like global listed infrastructure add defensive diversification to the fund's growth assets. With the current high real yields in South Africa, 20% is invested in local income-bearing asset classes. On a gross of fees basis, the fund has closely tracked and for the last few years marginally outperformed its benchmark, showing the value of our TAA calls as well as the enhanced tracking capability of the fund. It has also kept pace and outperformed the global large manager watch peer group median. This is a reference to indicate whether a fund is outperforming or underperforming the flagship funds in the retirement savings space. The fund has also delivered inflation-beating returns since its inception in 2008, delivering in excess of 5% real growth. The rolling 3-year returns on this chart show the value added relative to the benchmark and peer group median. Over the last 10 years, the fund has outperformed the global large manager watch median 80% of the time on a rolling 3-year basis. That means for any given month over the last 10 years, our fund has outperformed the peer group median before fees 80% of the time. Furthermore, our fund has a 30 to 60 basis points fee advantage over its peers, leading to highly consistent outperformance as the compounding benefit of these lower fees accrue to investors. On a net of fees basis then, the odds of our fund outperforming the peer group median increased to approximately 90% on a rolling 3-year basis over the last 10 years. On this chart, you can see the fund's performance over 1, 3, 5, and 10 years relative to its peers, as well as against inflation plus 5%. Thank you for your time, and remember, it's about time in the markets, as well as putting the odds in your favor that allow you to achieve investment success.